following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everyone, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we start the show at this time.
The following takes place between 2 p.m. and 3 p.m.
And we've got oil and gold rather flattish. So not a lot to report on that. The S&P cash off 6 points. Volume a little better today than it has been. So we are starting to see a little bit of pickup. When we go to the dollar index, well, it's down finally. It's been able to break solidly under the 100 mark. And kind of interesting. I suspect that what we have in that is a lot of push to get it down ahead of more elections in France. And again, I guess May is going to be in June. May, December. May from the UK is going to have yet another election in June. But the big one everybody's looking for is France. If that goes the Le Pen way, then we can assume that the EU is what is it? Not verboten. Kaput. The EU will be kaput. So they're calling another election. But to me, 90% of it is probably France going the way of Le Pen. And if you get into the newspapers, they've been, wrong for 2 years now straight, adding about an extra 10% to the extreme far left candidate in any election all over the world. So what can you say? Well, I'm going to say that she has probably a better than not chance of winning. I think she probably, if I had to put odds on it, I think she's got a 65% chance of winning. That means the end of the EU, and they're going to do everything they can to make sure that the dollar does not go to 120 in a heartbeat, which it certainly could if the EU rolls over and plays dead, which I think that there's a good possibility. So I think a lot of the dollar push that you're going to see probably between now and the 24th and then again in May prior to the French is just insurance in case something goes. But she wins. I think the dollar's 105 and higher in a matter of days or weeks. So what else do we have happening out here today? Well, we like to talk about it, but we like to get a little bit of history before it.
And it's all just a little bit of history repeating.
And what do we have for history today? In 1906 at 5:13 a.m., an earthquake estimated at close to 8.0 on the Richter scale strikes San Francisco, killing hundreds of people as it topples numerous buildings. The quake was caused by a slip of the San Andreas Fault over a segment about 275 miles long. The shock waves could be felt from southern Oregon down to Los Angeles. San Francisco's brick buildings, wooden Victoria structures were basically devastated. Fires immediately broke out because of broken water mains, prevented firefighters from stopping them. Firestorms soon developed worldwide. And, of course, gas lines ruptured. Real end of the world kind of stuff. Besides being built on what is the equivalent of quicksand, at least the older part of San Francisco. This event made one of the biggest traders ever, and took him out of what he would call the pikers realm and threw him into the super traders realm. I'm talking about Jesse Livermore. He had seen the news reports coming in and teletype from his broker. And if I remember the story right, I may be getting a couple of these mixed up, he knew that there was going to be hell to pay. The reason why wasn't the damage to the houses, but he'd been to San Francisco many times, and he knew exactly the weak point in everything that had disc broken. It was the rail system, that it would take years to repair the rail system. That meant that all the stuff that went into San Francisco would have to probably come around by ship and other means. They didn't have enough docks for all what they needed. Everything was being used was the rail system at that time. So he knew that it was going to take years, if not a decade, for San Francisco to recover. He, of course, shorted a lot of stocks. And very interesting in his book that he says, well, I knew what was going to happen. It had to happen. And so I shorted, and nothing happened. He says, and 2 days went by, and 3 days went by, and 4 days went by, and 5 days went by. And guess what? The market started to slip. Everybody started figuring out what he, just using common wisdom and knowledge, knew, and that was, without the rail system, the rebuilding of San Francisco, the trade coming in there, he shortly or heavily shorted a lot of the commodities, or went long the commodities that would have trouble coming in, that came in from out of the country. He also shorted most of the stocks that had a lot to do with San Francisco, where their profits came from. And as he said, that took him out of the mere piker and into the, what I'll call, super trader. But you never know. You see some headlines out there. I know a lot of people like to avoid them, but occasionally you can make some fairly decent money if you just use a little foresight and some common sense. Seems to be a dearth of that actually in the stock market. But in this day, in 1906, the earthquake happened, making a huge trader out of Jesse Livermore. And I think that was the first time he made $1 million in a single trade. That's in 1906 dollars too. And kind of moved him out of being just a schmuck. As he says, after you know how to trade, making $1 million is easier than 1,000 before you did. On this day in 1906. We've got other things going on in the markets, so we're going to go ahead and take a look at those. You can give me a call at 877-927-6648, and we'll be glad to take a look at whatever you got. What else do I have out here? Okay, I need to go back to this. Hang on just a second. Got to move some stuff around. I bought some new monitors today, and I got to start setting some of these things up correctly. So what else do we have going on here? Maybe it's a little farther down. Well, now I'm to the break. I'll figure it out during the break. We'll be back. Give me a call, 877-927-6648. No, he shorted a bunch of stocks in San Francisco, and he went long some commodity that came in from there, and the commodity was his big money maker. We'll be back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And, well, we get to pull out the losing horn. And that's for WW Grainger, GWW. If you're not familiar with this company, they sell literally just about any kind of attachment or extension cord or cable or, I mean, if you're in the industrial building a building or you've got a building and, you know, you're building maintenance, you need extension cords, you need replacement electricity to run through the conduit. You need more fiber to put in more internet in your building. You need literally everything. If you ever go by one of these places, you ought to just go into the showroom. But literally, if you need to run over there and get it, they got it, and just about everything. But I used them a great deal when I was in business. And always pretty much had the stuff, of course, long before the advent of Amazon giving you stuff the next day or the 2 days after. And they may be succumbing to that issue where you don't even have to send somebody over there, that if you wait until 4 o'clock, you can get Amazon to deliver a lot of stuff. And I think that's kind of hitting Grainger. They didn't really say it in their earnings release, but this thing kind of went above. Always have to worry about stocks that do not break with a big sign of strength. This one did not when it was breaking over the 240. Got to 260, 271. It's rolled all the way back down. And, of course, blew apart today with 4 million shares going up against the previous $200 low. What is that? On October 25th. So a huge blowout for WW Grainger. Also missing is the Goldman Sachs. Down fairly decent volume, but just right now back to support, which is the small sign of strength back on the 30th of November where this thing came up on 6.5 million shares and kind of just back down in here with 10 million shares already. So kind of telling you that it's back there and it's hit it with more volume. So you're not going to get some kind of V retracement on that. Netflix NFLX. Look at that one real quick. Redraw it. This thing did get a little lower, down to $140 on a spike. It's back in the 143s. It's not off. It's kind of still back into this trading range. It traded, I think, down to 142 after the bell last night, traded as high as 150. A lot of people were after looking at the initial numbers, very afraid that they were going to continue to throw a lot of cash on these big budget movies. They did a Hidden Dragon something part 2 that was a huge bust for them. They thought that it would kind of open the door in China, Japan, and Asia. It did not do that. Wasn't that good of a movie. They said that they would work a great deal more on doing things like comedy, stand-up specials, anything that they can get that's original that doesn't cost much to produce. So low-cost comedies, low-cost anything is what they're going to go after, and probably not going to see these guys make the big blockbuster films that they kind of were gravitating to. They hadn't really made that many yet. But they think they're going to go after independent films, smaller films that they can make a lot more mistakes and probably a much better idea. So it started trading up to 150 last night. A lot of people came out, started throwing eggs at it fairly quickly after the open, sold it off after it kind of opened fairly close to yesterday's high, and now down about 144. A really bad earnings call? No. A really good one? Not at all. But can it stay in this trading range after a couple of days? If this thing does not bust, my guess is it continues to hover around here for a while. I just think that this one may have a more to chew, maybe mostly because of Amazon. Amazon is making a few more blockbusters. They include it with their free shipping. And their Amazon Web Services and some of the other stuff that they do can allow them to cut the margins in some of those sectors like video. And they have a much better system of actually selling additional content. And if you've got Amazon.com, or you've got Amazon, you've got the Fire Stick, you'll see that half the movies in there, they kind of salt them that you can buy. And it's really tough to figure out which ones you can and which you can't. All they need is a handful of those to pay off every year, and they'll be much better off than Netflix is. So is it going to happen overnight? No. But if I was a betting man right now, I'd probably lean more to Amazon and less on Netflix, as Amazon targets more and more selling video along with its free video with its Prime membership service. So what else do we have out here? We got Netflix, got Goldman Sachs, we got that. Let's take a look and see how some of the other stocks of the big names are trading. Again, as I said yesterday, I don't see a lot of risk reward on either side of the fence. Too many shorts, and that kind of basically pushed the market up yesterday. But today, Doji and Microsoft with light volume, so you're not getting much there. When we look at Facebook, this is the first day of their developer conference. They've got, of course, their own PR nightmare, not quite dragging a guy through the aisle, but of course, someone, let's just call it what it is, snuff films on Facebook. Again, Doji out here, is that really telling us anything? If you had a good long move, it's either the halfway move or the bottom. This and what we're doing here, really not telling you much of anything. Let's take a look at some of the other ones. We looked at Amazon, Facebook. Let's take a quick look at Google. if I don't put one too many O's in the Google. Another doji out here. So my guess is that the indexes will start to move probably about Thursday. We got some earnings after the bell, and after this break, we're going to go through those, take a look and see if there's any setups in them. But again, I think it's probably, we're waiting for a theme to develop, a narrative. Earnings are weak, earnings are good. A handful of them that are kind of all over the place, and frankly, a little tough to get your teeth around, mean that we probably could wait a little while. And of course, we're off 76 cents on the dollar index. That's going to help at least some of these bigger companies in the next few days, at least for a little while. So what do we got? We got earnings. We got a lot of earnings. We'll be back. We'll go through there and preview them for after the bell tonight.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're talking about Sears actually selling houses and whether Amazon will. What else is going on? Anyway, off 75 cents on the dollar index. That's the big mover. Everything else kind of staying put. McKesson, that nice little pop down. This thing had a high volume low back on 114.30 31. That was October 28th. 28 million shares. That would probably be where you would want to take a look at this. Last time we were down on January 30th with 3 million shares at 134.17. There's also yet another gap out here that's still unfilled at about 132. If this thing could get down here after today, if volume really dried out at about 132, you would probably find some support there. As we said, going to talk about some earnings after the bell tonight. I show IBM out here. And again, this thing's kind of come back on light volume. Could it be a big ABC on the way up? It could. I don't know of anything in fundamentally out there that's new for this company. So maybe they've sold a bunch of Watsons. This is the time. I don't know how you would tell, because you're basically saying that, you know, you sell 10 Watsons, that's probably good for $20 on the price of this stock. And I just don't know. It's kind of come back on light volume so far, a little bounce off the 168.98 low of last week. But this is a very opaque company. One of the reasons why I try to stay away during earnings on this, and that is they sell a handful of very expensive things. It's much easier to figure out a company that sells a lot of inexpensive things or just a lot of things. You can look at car lots and see how full they are. You can go to the store and see how fast the talking baby flies off the shelf. Man, it's tough to figure out what a handful of companies are buying and IBM, because none of them want to talk about it. It doesn't really. Sometimes you get some press releases, but for the most part, you don't. There was one yesterday that was kind of interesting that one of my subscribers sent a link to, and it was something I'd been fighting with over the last few weeks. And IBM was actually going to allow people to, they were going to actually make a custom version for them to install on some of the more expensive machines. I thought it was rather interesting just because it was a freaking nightmare for me to install all this stuff. And I thought, well, it's kind of nice if you're going to sell a $100 or $200 million computer that you can install stuff on it that actually works without pulling your hair out. But yeah, anything going on that? Not really. Of course, if you want a bucking bronco, we will have that too. Intuitive Surgical after the bell. Now, this one's at its highs and extremely dangerous either way in my book at here. You've gone and built up a pretty nice head of steam back from March 28th through today. And there hadn't been a lot of volume up or down. Very tough, again, to figure out what this company is doing. Maybe if you're in the medical field or in the insurance field, you might have a better idea of what's going on. But talk about opaque, fairly opaque in the fact that, you know, they continue to sell machines at what rate? Man, what a guess. And, of course, an expensive stock that is fairly thin after hours and always does not fail to give somebody a heart attack and someone else a trip to the buy a new house somewhere. Yahoo, this thing's just kind of moving a little higher. I don't think that there's anything really to speak of after the bell tonight on this. Doesn't really matter. It's getting eaten up no matter what. LRCX. And again, up here at the highs in the biotech sector that everybody hates. My guess is this thing's got a ton of shorts on it up at this level. So you really need them to kind of whiff to really get this thing to head on down. My thought would be is if you wanted to short this, it would be much better to maybe see a little short squeeze on this for a day or two and all the energy come out and then pull the trigger on this thing. And, of course, risk reward is pretty horrible for going long in this one, so there's not much there. What else do we have out here? Fulton Financial. Are all these after the bell? Yeah, looks like it. See if there's anything else out here. I don't see anything else that's really going to move. That's it for then. Let's take a look at tomorrow real quick. Oh, went back. Come on, go back. That's Wednesday. Okay. So what do we have? Before market open tomorrow morning, we go to Morgan Stanley. Now this one looks to me like it could surprise to the downside. This thing really hasn't gotten a lot of juice. Your last big low is March 27th, $21.60, or 6 cents, excuse me, with 21.6 million shares. You got into it with 10 million shares on April 13th. You've had two kind of sideways days out here, but no one's rushing into this thing as it's pulled back. And this one has, I think, just the setup out here. I'm not predicting nor am I trading it. But if there was a stock that whiffed, this thing could easily break through that $40 level. And the next real big stop, I suspect, would be about 35 bucks. So I could see a little bit of movement on that one, far beyond, I think, what we're seeing in that right now. We also have Abbott Laboratories, ABT. And this one's kind of pulled back a little. Energy's been okay. Last 3 days, you gapped down 2 days ago with some decent volume. You've kind of repaired almost all of that. My guess is you had a lot of people piling in short on this one. I don't think there's a lot of downside. The upside's limited to 45.84 unless something just amazingly comes out of them that I don't see. GPC, Genuine Parts Company, GPC. Now this one, again, you know, you could see some big action in this one. It may have made a top out here, and if it whiffs badly, it could break the 86.03 low of November 9th, and that really can take you back a while. If I remember this, is $74.45 from the January 15th low. So that's kind of the weakest one of out here. Anything else out? Signature Bank, First Community, Morgan Stanley. Let's take a quick look after the bell tomorrow night. Of course, Qualcomm. These guys have been mired in every kind of legal difficulty that you could see. Another stock that's hanging out here at the lows at the moment, fairly light volume. Again, this is a stock that could get back up to 56 bucks on decent news. The downside is this thing slashes through $52, and you are back to probably, what you can say? I think you could, if this thing whiffs, I think you can say that it's on its way back down to $40.78. That February 11th low, almost a little over a year ago. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And what do we got? Off 6 points still on the S&P cash. Not much action. Again, all the action coming in the last 15, 20 minutes of the day, including volume. So been very tough the last week or two to start giving a lot of advice before you wait until the close of the day. What else do we have going out here? Take a look at a few other stocks. Before the bell, or after the bell tomorrow night, we also have eBay. This one's been hanging up at the highs. A lot of discussion, a couple people emailing me about a possible buyout candidacy for PayPal. I don't think eBay has any shares left, but I'd have to go back and look at it. Again, this one doing much better in the rest of the world. It really hasn't done much for several years here in the United States. But again, very tough to figure out how all this stuff is doing overseas without a lot of work. I think there's easier stocks to figure out. AXP, American Depressed Card. Now, this one's kind of interesting to me in that you had a big long-term gap that goes back to the 12th of February in 2015, came down with 32 million shares. So some fairly big days. It came up, tried to get into it on August 9th of 2015, came all the way back down to 49.53 on February 11th. It's worked its all the way back up to 82 bucks on March 1st, and then it's kind of pulled back down to this last gap up that didn't really have any juice whatsoever. And again, real no big signs of strength. And when you got back up to that gap that was still hanging out there, a little less than 5 million shares. So just the energy off this October 13th low to that March 5th high just didn't have any juice in it whatsoever. I don't know what's going on with this company, but if I was a betting man, I would bet for lower after earnings tomorrow night. They just seem to always have something horrible to say during earnings for the last year and a half. What else do we have out here? Selling May. Take a look at CP, which is Canadian Pacific Railway. This thing's been nothing but a trading range. And again, just nothing in that one. Thought there was another rail, CSX, reporting tomorrow night too. Now this one, of course, looking much better. Unfortunately, there's nothing in here that I could buy or sell. I would like this thing to get back into about $40 to buy it. And maybe it gets back down there with lighter volume, but I don't see a lot. United Rentals, also after the bell tomorrow night. And this one did come back. It did pretty much what it was supposed to. You had a sign of strength on the 26th of January, went up on 6.5 million shares, came back in, touched that gap on March 27th with 1.4 million shares. So did exactly what it should. Had its preliminary bounce. Now it's kind of coming back here, looking at earnings and not a lot of juice, but pretty much on a bullish tint on that one. I don't see anything else you can say about that. One that's been a surpriser and not a pleasant surpriser in earnings has been Select Comfort Corporation. They've done a lot of acquisitions of other bedding companies. And if you listen to their ads, they don't sell beds. They said they sell bed systems. Well, anyway, if you're interested in a bed system, SCSS, again, just this thing kind of capped down with some fairly decent volume going back to, what is this, the September 28th of 2016 on 1.5 million shares. That acted as resistance on August 15th of last year. And again, you're kind of getting back up to there. But my guess is that is going to be the upper side of resistance. So I don't know if there's anything else you could say other than there isn't a lot of good risk reward in that one. And they have been more than willing to drop the chalupa during earnings. See if we looked at here, CLB after the bell tomorrow night. This one I've traded before and made some money on. Man, I talk about an asymmetrical triangle. If you want to take a look at this one and go back into the books, an asymmetrical triangle is lower highs and higher lows. And you just keep doing it until, if you just put a big greater than sign on it, it eventually breaks through that greater sign. If it's more than 3/4 of through that, then that normally happens. You remember, normally stocks really bust out before they actually get to that point. But somewhere between 3/4 of the way through to the actual apex of that greater than sign in this lower highs and higher lows, ends being a big breakout. That breakout almost always, well, let me put it 75-80% of the time, is the first move is the wrong side. I.e., if it's going lower, it'll break to the high side first, give you an opportunity to short it. And if you're headed lower, or if you're headed higher, it will dip back down, kind of shake you out for a day or two. And then if you got no volume, you can jump back in it. And a lot of times those are some of the tastier trades out here. What else do we have out here for after the bell? Let's see if there's anything else out here in my list of stuff. SLG, LSL, benchmark. I think that's about it. So got a little bit more time to take a look at some of the other ones. I wanted to look at some of the 52-week highs and lows and see if we get any more indication that a lot of those are starting to roll over. I got to sneeze. Wow. What a big sneeze. Yeah. I think we could get a head fake either way this week, which is kind of interesting. American Capital Agency Corporation, another 52-week high, AGNC. No juice on this one today. And really not the kind of sign of strength that you would have liked to seen even yesterday as it broke to a 52-week high. Anworth Mortgage, AXO on, that's Ballard Power. Now this one we've talked about was kind of interesting. It had hit a 52-week high yesterday, rolled back over today, but it hadn't given that much up. But a nice move from the low $2 range about 2 weeks ago. CBLI, Cleveland Biolab. Oh, we talked about this one yesterday. Huge move and a little bit of a retrace out here today. Back at about $1.80, that one would be very interesting. CBOE, Holdings, again, back up to these highs. No real sign out here that this one is rolled. CIM, which is Chimera Investment. We talked about this one in a very extended ABC. Pretty much had gotten up, or I think we talked about this one and the possibility of this thing hitting its target at $21.65. Just 70 cents away for 1-to-1 ABC. But looking pretty good out here. CIM is the symbol on that. We'll be back after this short timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, of course, being Tuesday, we've got Tom O'Brien for the next 2 hours, and then Andy Heck at 5. And, of course, so I heard a little deal out today. Was it today or yesterday? About steak prices conceivably being less than pork prices. So maybe Andy will answer my dreams of very inexpensive T-bones for the rest of the grilling season today. Always my favorite segment on his show. Of course, Tom will be talking the end of the day, and, of course, all the earnings in the 4 o'clock hour, which there will be many that we've already talked about here today. So we will continue on. KBH Home, another 52-week high They ain't thinking that the interest rate's going higher, apparently. This thing just going higher on a lighter volume out here today. Again, no real sign, no reversal. My guess is that these are going to be the first ones to crack if we do start heading down in any kind of serious manner. McDonald's, another 52-week high today. Little doji out here. Volume's about what it's been the last few days. I don't see anything exciting to make me think that the top of the market is in yet. And MFA Financial, another 52-week high. What else do we have in here? This is Annaly Capital Management Company, another 52-week high. Nice big ABC. And this one running up to 1179 today and a little bit of a doji. SWC, which is Stillwater Mining. This one's picked up a little bit yesterday and a little bit today. A lot of volume, but, man, some fairly narrow trading. I wonder if there's some kind of buyout going on in there. TWO, Two Harbors Investment, another 52-week high. This one did not hold the high of yesterday, so you might have the first step, but not a big step yet, in forming some kind of a high in TWO. So we got about 2 minutes left. I think there was a couple more I wanted to get into on my own scans. Yelp. We saw some companies. What was it? I think it. We'll look at it here in a second. It's GNC. Was having a big day today. No matter how much you get slammed down, especially when you're, as you know, you got a 30 or 40% short interest in your stock, it doesn't take much good news to pop it fairly hard. My thoughts are that this may be the case out here with Yelp, too. Just no good news out of it, highly short, but is kind of testing its previous low of 31.60 on March 27th. We'll take a quick look at GNC. This one is kind of the big winner out here today. And what do we have? Oh, we got to play the party horn for this one. Yep, up off the floor. The last high was February 23rd at 923. 9.2 million shares, 22 million shares today. Looks like it's even going to hold this high. A lot of discussion about how they're going to get their groove back. I don't know. Like I said, we've talked about how tough it is from a variety of standpoints. A lot of mall stores, so they're kind of got the curse of the mall. And then, of course, the changes in the FDA rules on how you can advertise that had been fairly successful for them. They're going to have to change that. Well, even in a down day, you can have a good, or down stock, you can have a good day. This one, pretty good. Lots of volume and through the previous high. So I got to say that maybe there's a little bit of life left in GNC. In the meantime, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.